Hey everyone, and welcome back to Demand and Supply Zone. Ready for another deep dive?
Always.
This week we're going to tackle natural gas.
Yeah.
Specifically, the NYMEX Futures contract.
The NG1.
That's the one. And we're really trying to get a handle on where things might be headed as we look at the week of April 7th, 2025.
Right.
So to do that, we've got charts as of last Friday's close.
April 4th.
Yep, April 4th.
We had a final price right around 3.837.
Okay.
But the market opened quite a bit higher, actually, at 4.119.
Oh, wow. So a pretty big move during the day.
Yeah, it touched 4.153 at the high
Okay.
and dipped down to 3.811 on the low end.
Gotcha.
So pretty active day, almost 230,000 contracts traded.
Wow. So a lot going on.
Yeah.
And of course, we've got all the fundamental news and the latest analysis to try to make sense of it all.
Right.
So really our goal here is to cut through the noise and give you the insights that you need.
Exactly.
We'll be looking at recent market moves, what's driving supply and demand, the impact of global events in the overall economy.
And then try to paint a picture of what the near-term outlook for natural gas might be.
Yep.
And I think it's important to note that as last week ended, the market was really testing a key support level.
It was.
So let's break it all down.
Okay.
Starting with what's been happening with the price.
All right. So focusing in on the May natural gas futures contract, we definitely saw a pretty noticeable drop.
Yeah.
Closed around 3.844 on Friday.
Okay.
And that's a decline of somewhere between 5% and 7% for both the day and the week.
Yeah, that's a decent move.
Yeah, it's significant.
Especially in such a short period.
Right.
Now, earlier in the week, we saw the price sort of bumping up against resistance.
Yeah, right around that 4.25 to 4.3 area.
Couldn't quite break through, though.
Nope, just sort of stalled out and then pulled back.
Okay, so let's bring in the charts now.
Right.
Starting big picture with the weekly chart.
Okay.
What are the key things that you're seeing there?
Well, on the weekly chart, what's interesting is that we had that recovery from the lows earlier this year.
Right.
But it seems like that upward momentum has hit a wall.
Yeah, it has.
And last week's candle, which remember is just a way to visualize the trading range and closing price. It was bearish,
Okay.
meaning it closed well below its high, which often suggests sellers were in control at the end of the week, and we might see more downward pressure.
So if we look further out, what are some key levels of support that we should be paying attention to?
Well, there is significant support around that 3.02 to 3.9 area.
Okay.
That level's acted as both resistance and support in the past.
Kind of a battleground.
Exactly.
Yeah.
So it could attract buyers if the price drops that far.
Okay.
Below that, the 2.68 to 2.70 represents some previous lows. So that could provide support as well.
All right. And on the flip side, what about resistance?
Well, we have resistance around 4.4 to 4.50, those recent highs.
Okay.
And then up towards 4.7 to 4.80, which was the peak back in March.
Gotcha.
We could think of that 3.0 to 3.9 area as a potential demand zone,
Okay.
where buying interest has historically been strong.
Makes sense.
And the 4.50 to 4.80 area as a potential supply zone,
Okay.
where we've seen selling pressure in the past.
All right. So those are the big picture levels on the weekly chart.
Right.
What happens when we zoom into the daily chart?
Well, on the daily chart, you can really see how the uptrend that started in February is being challenged.
Yeah.
We had that high in early March,
Right.
but then it failed to make a new higher high in late March.
Right around 450.
Yeah, exactly. And that failure to continue the upward trend can sometimes signal a shift in momentum.
Okay.
And then that big bearish candle on Friday really pushed the price below those recent lows.
Yeah, around 4 point. Right.
But so the immediate support level to watch now is that 3.80 to 3.85 area,
Okay.
which was tested on Friday.
Uh-huh.
If it breaks decisively below that range, the next support levels could be around 3.50,
Okay.
which is a swing low from late February.
Right.
And then again, that 3.0 to 3.10 area that we talked about on the weekly chart.
All right. So those are the support levels. What about resistance on the daily?
Well, we have 4.00 to 4.05.
Well.
That broken support could now act as resistance.
Right.
Above that 4.25 was an area of recent price congestion. And then, of course, the 4.50 high.
Okay.
And there's also a potential double top pattern forming.
A double top.
Yeah, two peaks at roughly the same price level.
Yep.
In this case, around 4.75 in early March, and then 4.50 in late March.
I see.
With a low in between, and that intervening low around 3.80 is called the neckline.
Gotcha.
If the price breaks below that neckline, it could suggest a bigger move down.
So a potential double top, that sounds like a warning sign.
It could be.
What if we go even deeper now to the shorter time frames, like the 4-hour and 1-hour charts? What do we see there?
Well, the shorter time frames really emphasize that short-term downtrend that started when we broke below 4.0. On the 4-hour chart, we've seen some consolidation near those lows around 3.80 to 3.82. Immediate support appears around 3.80.
You're right.
And if that breaks, we might see further support around 3.7 and then down towards 3.50.
Yeah.
Looking at resistance on the 4-hour chart, we have 3.90, then that 4.0 to 4.05 area where the breakdown happened.
Right.
And then further up 4.15 to 4.20, which was a previous area where the price traded back and forth.
Right.
You can really see a supply zone forming between 4.0 and 4.25.
A lot of sellers there.
Yeah, and that demand around 3.80 is definitely being tested right now.
Okay.
The 1-hour chart basically tells the same story. You see that sharp drop on Friday.
Right.
Followed by consolidation right near those lows, support around 3.8 to 3.82, resistance right above at 3.85, and then 3.95 to 4.0.
Okay.
We also saw heavy volume during that sell-off on Friday, which then decreased during this consolidation.
So a lot of technical signals pointing towards potential weakness.
Yeah, it's something to watch.
But let's shift gears now and look at the fundamental factors.
Okay.
What's driving the natural gas market from that perspective? What's the latest from the EIA on natural gas storage?
Well, the most recent storage report from the EIA that covered the week ending March 28th showed a net injection of 29 BCF.
Okay, so more gas going into storage than coming out?
Right, and what's important is that this was bigger than the average forecast, which was around 27 BCF, and significantly higher than the 5-year average for that same week, which is only 17 BCF.
Right, so a much bigger build than expected.
Exactly.
Now, I know total natural gas in storage is still below the 5-year average and way lower than last year at this time.
Yeah, it's about 80 BCF below the 5-year average.
Okay.
And a whopping 491 BCF lower than last year.
Wow.
But this bigger than expected build definitely put some downward pressure on prices last week.
That makes sense. More gas going into storage means less immediate demand.
Right.
So what about the weather outlook? How are heating and cooling needs shaping up?
Well, the forecasts are showing that we might see some colder temperatures.
Oh, really?
Yeah, moving into parts of the Midwest and East Coast starting around April 7th.
Okay.
And that could lead to a short-term increase in demand for heating.
Right.
But we have to remember that April is typically a shoulder season.
That period between the high-demand winter and summer months.
Exactly. And during shoulder season, overall demand tends to be lower.
So this cold weather might give demand a little boost, but probably not for long.
Right. It's unlikely to be a sustained trend.
Now, another thing that's been in the news a lot lately is trade tensions.
Yeah.
How might those be impacting the natural gas market?
Well, there's definitely a lot of focus on the potential for new tariffs, especially between the U.S. and China.
Right.
And, this kind of uncertainty can create ripple effects across markets.
Including energy.
Right. And for natural gas, the main concern is the impact on LNG exports.
Liquefied natural gas.
Exactly.
Okay.
If trade relationships get worse, it could reduce demand for U.S. LNG from China.
And China's been a big buyer.
Yeah. A key source of demand support for U.S. natural gas prices.
So the tariff concerns are probably part of the reason prices fell late last week.
They're definitely a contributing factor.
And speaking of LNG exports, how are those volumes holding up despite the trade worries?
Well, despite all the concerns, U.S. LNG exports are still really strong.
Okay.
They're near record highs, around 15.8 BCF per day.
Wow, so that's good news.
Yeah, this export demand is providing a lot of underlying support for prices.
Really helping to offset some of those other bearish factors?
Exactly.
So we've got strong export demand. What about domestic production?
Well, U.S. natural gas production has been incredibly strong.
Okay.
It's currently near record levels over 106 BCF per day.
Wow.
There were some early signs of a slight dip in production at the beginning of April.
Okay.
But overall output remains very high.
All right, and what's the EIA saying about production going forward?
Well, they're projecting record high production for all of 2025.
Wow. So if those forecasts are accurate, we could have a lot of supply coming online.
Yeah, and that could really limit price increases.
Okay, so let's talk about market sentiment now.
Right.
What can we learn from the latest Commitment of Traders report, the COT report?
So the most recent COT report, which covers positions as of Tuesday, April 1st, showed that non-commercial traders, which are typically large speculative players like hedge funds, they actually increased their net short position to a pretty sizable negative 131.9 thousand contracts.
Wow, so that means they're betting that the price will go down.
Right. They're holding more bets that the price will fall than bets that it will rise.
So that's a pretty clear sign of bearish sentiment.
It seems to be.
So to wrap up this overview, what are the key price levels you're going to be watching in the coming week?
All right, so just to recap, the important support level is 3.80.
Okay.
If we break below that, we could see further declines down to 3.70, then 3.50. And then that more significant 3.1 level further down.
Gotcha.
On the upside, resistance is at 3.9.
All right.
Then that 4.0 to 4.05 zone where we broke down.
All right.
And then if buyers can push through those levels, the next resistance is 4.15 to 4.25.
Okay.
Then 4.4 to the 4.50. And finally, that 4.75 high.
All right, so we've got our roadmap of levels.
Yep.
Let's move into a more detailed analysis now, starting with a deeper look at supply and demand. We've touched on them, but let's really dive into the dynamics here.
Right.
So on the supply side, what are the key factors?
Well, main story is high production.
Right.
As we said, U.S. natural gas production is near record levels. And the EIA forecast suggests that this growth will continue not just this year, but into 2026 as well.
So lots of supply potentially coming online.
Yeah, and that abundance of supply naturally limits how high prices can go.
Makes sense. And on the demand side, it feels like there's a lot more going on,
There is.
especially with the shoulder season here.
Right, we're in a transition period where demand for heating is declining.
As we move out of winter.
Exactly. And that typically leads to lower overall domestic consumption.
Okay.
But that decrease is being offset somewhat by the continued strong demand for LNG exports.
So exports are helping to prop up demand.
They are.
But beyond those seasonal factors, are there any other sources of demand we should be aware of?
Yeah, there's a steady increase in demand from industrial users, and increasingly from the power generation sector, particularly to meet the growing needs of data centers.
So that's more structural demand that's not tied to the weather.
Exactly.
And of course, we have that short-term boost potential from the colder weather.
Right. But as we said, it's not expected to last.
So it's kind of a tug of war between decreasing seasonal demand and these other sources of demand.
It is.
Now, what about the storage situation? We know levels are below the 5-year average.
Right.
But that last injection was surprisingly big. How do you make sense of that?
Well, the fact that storage is below the 5-year average does provide some price support.
Okay.
But that large injection suggests that the deficit is narrowing.
Okay.
And looking ahead to the next storage report, which is for the week ending April 4th, early estimates are all over the place.
Yeah, they range from an injection of 20 BCF all the way up to 58.
Right, with the average expectation around 47 BCF.
Okay.
But the important thing is that even the low end of that range is still above the 5-year average for that week, which is only 17 BCF.
So it sounds like we're likely to see continued builds in storage.
Yeah,
And that could put more downward pressure on prices.
it's possible.
So those below average storage levels might not be as bullish as they were earlier in the year.
Right, especially if we keep seeing these large injections.
Now, you mentioned seasonal patterns before. How important is the shoulder season historically for natural gas prices?
Well, historically, April is a weaker month for natural gas.
Okay.
And that's mainly because it's that transition between winter heating demand and summer cooling demand.
So during shoulder season, overall demand tends to be lower.
Right, and the focus shifts to injecting gas into storage to prepare for summer.
So this seasonal pattern could make it tough for prices to rally.
It can.
Okay, let's zoom out even further now.
Right.
And consider some of the geopolitical and economic factors that could be at play.
Okay.
So how are things in Europe potentially impacting our market?
Well, European natural gas prices are always something to watch.
Yeah.
Because they're really sensitive to supply disruptions, like the ongoing uncertainty around transit through Ukraine or any potential sanctions that could affect global energy flows.
Yeah, those are big wild cards.
Yeah, they can create a lot of volatility in the European gas market.
And since the global LNG market is interconnected,
Right.
those price swings in Europe can have an impact here in the U.S.
Exactly, especially through our LNG exports.
And the global LNG market overall is still pretty tight. Right?
It is. There's strong demand from both Asia and Europe.
And that's helping to support those high levels of U.S. LNG exports that we talked about.
Exactly.
Okay, so let's shift to the U.S. economy. Now, we've got a lot of data coming out this week.
We do.
What are the key reports that you'll be paying attention to?
Well, from the U.S., the big ones are the inflation figures, the CPI on Thursday,
Okay.
and the PPI on Friday.
And those will give us a sense of where inflation is headed.
Right, which is a key factor for the Fed's monetary policy.
And speaking of the Fed, we also have the minutes from the last FOMC meeting coming out on Wednesday.
Right, those could give us more insight into their thinking on interest rates.
And of course, we can't forget the weekly EIA natural gas storage report on Thursday.
Right, That's always a big one for the natural gas market.
And we should also keep an eye on the Chinese CPI, which is due out on Thursday as well.
Right, because economic data from major economies can have broader implications.
And, of course, any news on those potential trade tariffs will be important to watch.
Absolutely.
Okay, so a lot of data to digest this week.
Yeah.
Now let's try to put it all together and look at the future outlook.
Okay.
Based on what analysts are saying,
Right.
it seems like there's a range of expectations out there.
There is some divergence in the forecasts.
So what are some of the key projections?
Well, the EIA, in their February short-term energy outlook, they had raised their average Henry Hub price forecast for 2025 to 3.8 ASO per MM2.
Million British thermal units?
Right, citing strong winter demand and inventory withdrawals.
Okay.
And then in their March outlook, they increased that 2025 forecast again.
Up to around 4.20?
Yeah. And they also raised their forecast for 2026 to around 4.50.
So they're getting more bullish
They are.
based on expectations of tighter storage,
Right.
but other analysts are a little more cautious.
Yeah, BMI is projecting 3.40 per MMB2 for 2025.
Okay.
And JP Morgan has a similar forecast around 3.50.
So a bit of a range there.
Yeah. And then the trading economics model is a little more bullish in the near term.
What are they saying?
They're suggesting a price of 4.07 by the end of the second quarter of 2025.
Interesting. So we've got kind of a mixed bag of predictions.
We do.
Now, you also mentioned the possibility of a contrarian move.
I did.
What did you mean by that?
Well, remember all that short interest we talked about?
Those non-commercial traders betting on lower prices.
Right. Well, that could actually set the stage for a bullish short squeeze.
Okay.
So if some unexpectedly positive news comes out,
Like stronger than expected demand or a supply disruption, especially now that the price has fallen below 4.00.
yep, those traders who are short might have to quickly buy back contracts to limit their losses.
And that buying could push prices up.
Exactly. It's a reminder that high short interest can make price movements more extreme.
Especially when things change unexpectedly.
Right.
Now, finally, let's talk about how natural gas prices tend to correlate with other markets,
Okay.
like the U.S. dollar, crude oil, and equities.
All right.
So typically, what do we see?
Well, with the U.S. dollar, we usually see an inverse correlation.
Meaning when the dollar weakens, natural gas tends to strengthen?
Right, because it makes natural gas cheaper for buyers using other currencies.
Okay, but this relationship isn't always perfect, right?
No, there are other factors that can influence it.
Like those trade tensions.
Exactly. They could actually lead to a stronger dollar.
As investors seek safety?
Right. And a stronger dollar could then be bearish for natural gas.
Okay, what about crude oil?
Well, the correlation with WTI crude oil is a bit more variable.
Sometimes they move together, sometimes they don't, depending on what's happening in the broader energy market.
Exactly. And we did see both natural gas and crude oil decline on Friday.
Right.
And some analysts attributed that to worries about an economic slowdown or the negative impacts of trade disputes.
Uh-huh. And what are crude oil prices expected to do this year?
Well, current forecasts for WTI in 2025 are generally in the $70 to $74 per barrel range.
Okay, so natural gas and crude oil can sometimes move together, but it's not always a reliable relationship.
Right.
Now, what about equities?
Well, natural gas often has a positive correlation with equity indices like the S&P 500,
Okay.
especially when there's a lot of risk appetite in the market.
So when stocks go up, natural gas tends to go up.
In general, yes.
But again, it's not always a perfect correlation.
Right. Natural gas has its own fundamental drivers.
And we saw both natural gas and equities decline on Friday as well.
Exactly, amidst those concerns about tariffs.
So while these correlations can be helpful,
Uh-huh.
it's really important to focus on the specific drivers for natural gas. Okay, so as we wrap up this deep dive, what's your overall assessment for the week is April 7th?
Well, taking everything into account, the outlook for the week seems to be neutral to cautiously bearish.
Okay.
That technical breakdown below 4.0 and the fact that we're in shoulder season.
Which usually means weaker demand.
Right, those are definitely pointing in that direction.
But we can't forget about those below average storage levels.
And the strong LNG exports.
So those are providing some support.
They are.
So what should our listeners be watching most closely in the early part of the week?
I think the most important thing is that 3.8 support level.
Okay.
If we break below that decisively, it could signal further declines.
But if we hold above it, we might see a short-term recovery.
Right.
And we should probably expect some volatility this week.
Yeah, with all the news coming out about those potential trade tariffs.
And those key economic data releases.
Right, those could definitely move the market.
So while the analysis leans slightly bearish right now, We have to remember that things can change quickly in the natural gas market.
They absolutely can.
All right, well, this has been a fantastic deep dive into the natural gas market. Really appreciate your insights.
My pleasure.
So here's a final thought for you, our listener. Considering all these conflicting signals we've talked about, the bearish influence of seasonality, the support from tight storage and strong LNG demand, and then all the geopolitical and economic uncertainties on top of that.
Yeah.
What single factor do you think will ultimately have the biggest impact on natural gas prices in the coming weeks? And how can the analysis we've shared here on demand and supply zone help you track and understand that impact? It's a lot to think about, but that's what makes this market so fascinating.
It is.
Thanks for joining us, and we'll see you next time on Demand and Supply Zone.